morning and welcome to my morning report chart appraisals on Wednesday 26th of July with me, Rich Perry, market analyst at Hantec Markets. We've got a little bit of dollar strength coming back into the market, and that's sort of been driven by a rebound in treasury yields, interestingly enough, ahead of the FOMC. Now let me just show you the markets board. We've seen the euro weaker today. That goes on from an intraday correction yesterday, back from that 117.11 August 2015 high. Sterling started to pull back again. You've just had the UK growth data out that was in line with expectations actually, but the market's just looking at the fact that UK growth remains pretty sort of not negative, but remains disappointing. First half of the year has not been all that great for UK growth, and subsequently sterling is under a little bit of pressure today. But yen basically flat on the day, the other interesting mover is the Aussie today, whereby we had Australian inflation coming out, CPI inflation missing on the Aussie, and it was a negative surprise on CPI for both quarter on quarter and year on year. So yeah, the Aussie under pressure on the back of that. Now let me show you the dollar, which has rebounded. Now if you actually looked at that on a candlestick chart basis, that would be a little bull hammer, and it's turned into a bit of an upswing, and the reason is because we've had a sharp increase in treasury yields. Look at the 10-year sharply higher yesterday, and the 2-year in the last couple of days, sort of stabilizing a little bit today, a little bit lower, but generally speaking, treasury yields having spiked higher. That tends to help to support tends to support the dollar, but also with the fact that bund yields haven't been pushing higher as much. Therefore, the spread between bunds and treasury yields has pushed out, and therefore that subsequently hits euro dollar, and that is a main driver behind the move overnight and into today on the dollar. Other big news is the fact that oil continues to climb. Look at that sharp move in the last couple of days. As suggestions out from the OPEC meeting that Nigeria is ready to take part in the OPEC production cuts once it hits 1.8 million barrels. But also we had the API inventories for the American Petroleum Institute, and they came significantly down on the crude stocks. So that helped to burst oil higher yesterday. So quite a lot going on today. The FOMC meeting is the main event. But in terms of your equity markets, we had a bit of a bounce. That sort of bounce has continued today. So we've had that UK growth data. We've got US home sales, new home sales I should say, this afternoon at 3 o'clock. US new home sales at 3 o'clock. 6:15 is the expectation. Then crude oil stocks. Crude oil inventories from the EIA, 2.7 down. 2.7 million barrels of drawdown, and then distillates and gasoline both 1 million barrels of drawdown. And then at 7 o'clock this evening we have the FOMC rates decision. No expectation of any rate change tonight. It's not a press conference meeting, and you don't tend to see the Fed moving outside the press conference meetings. So not expected any movement there. Also balance sheet reduction, not expected to see any announcement of balance sheet reduction there. You might see a bit of a minor tweak to the FOMC statement. We've had inflation for the US disappointing in recent few prints, and therefore the FOMC statement might start to take a bit of account of that. However, no real change is expected on the Fed statement. On Fed meeting tonight. Could be a bit of a non-event, but obviously there's always that risk, possibly something going on. But that takes me to my chart today, which is Euro Aussie. Now, Euro Aussie has been an interesting chart in recent weeks. It sort of broke down below that 146 barrier, which had been a bit of a pivot. Had been sort of a bit of a pivot over since September really, providing base of support, become resistance again, and then supportive, and then broke down sharply last week. But then we had that turnaround rally, that suggested it might have been a false downside break, but now it's developed into a possibility of a head and shoulders reversal as a base pattern, an inverted head and shoulders, and that would come on a move above 47.75, which has been the basis of resistance throughout last week, and again sort of came in a bit today, 47.65, but sort of fell away. The market's sort of now trading between 46 and 47.75, and that is sort of an interesting range, really, because the sort of break either way could determine the outlook for the near to medium term. Because the break back below 46 figure, that would be that old pivot that sort of puts pressure back on the lows again, 44.22. However, the market is looking. Sorry, I've just moved my charts. Try and move that back. No. There you go. Yeah, sorry. The hourly chart. Yeah, it just looks more sort of range bound, really, and just sort of in the last week or so, it is trading between, as I said, that 46 figure area up towards 47.75. And the market is sort of buzzing around between that. Momentum indicators on the hourly chart sort of buzzing between 30 and 70. That suggests consolidation, really, within a range, and you can see that on the MACD lines as well. Stochastics just rolling over to sort of reflect this recent little dip back in the hourly chart. But yeah, the two levels to watch out for are 47.75 and 46 figure. Break either way sort of could drive that near-term outlook. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.